Crypto might be closer to a major shift than most people realize. In just the past few days, US lawmakers introduced a new national crypto payments framework, a 54 trillion asset giant is moving deeper into tokenization, a massive price gap is forming in Ethereum markets, Ripple is expanding internationally, and companies like DoorDash are exploring stablecoin payouts. This isn't random. This is structure forming. So the real question is crypto about to break out? Or is this just noise before another move sideways? Let's break it down. This content is for informational and educational purposes only and is not financial advice. Always do your own research before making investment decisions. Welcome back to Ledger Pulse, where we break down crypto markets beyond the surface. We're not just tracking price, we're tracking sentiment, structure, and smart money flow. If you want to stay ahead of the market and not react to it, make sure you're subscribed. Let's start with regulation, because this is where everything begins. US lawmakers have unveiled a bipartisan bill, the PACE Act. Its goal? To create a national payments license and bring fintech and crypto firms under OCC oversight. This is a big shift, because instead of unclear enforcement, we're starting to see defined structure. Now here's what stands out. The bill focuses on payments infrastructure, licensing clarity, and integration with existing financial systems. That tells us something important. Crypto is no longer being treated as a fringe asset. It's being positioned as financial infrastructure. But there's nuance here. The same framework that enables growth also introduces oversight, restrictions, and compliance requirements. So this is a double-edged sword. Clarity attracts institutions, regulation limits certain freedoms, and markets usually don't react instantly to this kind of shift. They absorb it slowly. Now let's talk about one of the biggest signals in this entire lineup. State Street, holding 54.5 trillion in assets under custody, is planning to deliver tokenized fund servicing. Let that sink in. This is not a startup, not a crypto native company. This is traditional finance infrastructure, and they're moving toward blockchain-based systems. This matters because tokenization is one of the clearest bridges between traditional finance and crypto infrastructure. And once large custodians move in this direction, it creates a ripple effect, no pun intended. Other institutions will follow. Now here's the key insight. Institutions don't chase hype. They build systems before demand explodes. So moves like this are not reactions, they're positioning. Now let's shift to market structure. There's currently a large gap forming between Ethereum and WIM markets. Historically, Ethereum tends to move in tandem with this metric, but right now, the divergence is the largest it's been in a long time. So the question becomes, does Ethereum catch up, or does the metric fall? These kinds of gaps don't usually persist, they resolve. And when they do, the move can be sharp. This creates uncertainty. Bulls expect a catch-up rally, bears expect a correction, but either way, it signals imbalance, and imbalance is what drives volatility. Now zooming out globally. Ripple just signed a partnership with K-Bank, South Korea's first internet-only bank. The goal? Enable cross-border remittances using Ripple's infrastructure and the Palisade digital wallet. Flows are already being tested between the United Arab Emirates and Thailand. This is important for two reasons. Number one, this is real-world usage. This isn't speculation. This is actual financial activity moving through blockchain rails. Number two, strategic geography. South Korea is one of the most active crypto markets globally, so expansion here isn't random, it's targeted. And this marks Ripple's second major deal in the region this month. That suggests momentum. Another key development, a new actively managed Bitcoin derivatives program is launching, with partnerships involving Kraken and Bitwise. This signals something important. The market is maturing, because derivatives increase liquidity, allow hedging, and attract professional capital. And institutional players don't just buy spot, they build strategies. So this kind of infrastructure supports larger capital inflows over time. Now here's one of the most practical developments. DoorDash is working with a Stripe-backed partner to enable stablecoin payouts. Think about that. Not trading, not speculation, payments. This is where crypto becomes invisible. Users don't need to understand blockchain. They just experience faster payouts, lower fees, and global accessibility. And that's how adoption really happens, not through hype, but through utility. So what's the bigger picture? Across all these developments, we're seeing bullish signals, regulatory frameworks forming, massive institutional positioning, tokenization expansion, real-world partnerships, and payment integration. We're also seeing uncertainty, market structure imbalances, regulatory control risks, and no immediate breakout confirmation. This isn't a hype cycle. This is a foundation phase. And those are the phases that usually feel the slowest, right before things accelerate. If you want to stay ahead of these shifts, not react after they happen, make sure you're subscribed, because we're not just watching price, we're tracking where the system is moving next. If you like this video, hit the like button. And if you'd like to see more, check out these videos here. Thanks for watching, and we'll catch you on the next one.